Today is Sunday, April the 11th. This is the video for Friday, April the 9th. And look at the McClellan oscillator, really bunching up here. When you read this article here, don't confuse the summation index with the McClellan oscillator. They are different things. The McClellan oscillator today, or Friday, closed at 82. The summation index was 3051, and that's what he's plotting down here, this number right there. So when he talks about smoothie, bumpy, he's talking about this number and not the one that we're looking at all the time. So to be consistent, we'd have to say that we're looking here at strength in the bulls, being able to hold off the bears, but not to pull away and get as far as the overbought line. And looking back, we have a high, a lower high, and another lower high. So the consensus should be that the breakout may very well be to the downside in the McClellan oscillator. Look at the last time we had something that looked like that. It was right back here. It wasn't as concentrated in terms of bunching up, but it did break to the downside. Once numbers get into the overbought area, they typically break to the downside, and we haven't even reached that. And the bears are not able to pull away from the strength of the bulls, keeping them down. And that is because although we had a really remarkable day in the Dow, up 300 points, and the last hour was all up, so was it in the NASDAQ, and the S&P 500 in particular saw most of its gains coming in the last hour. So that showed strength into the weekend. And we also have earnings coming up this week. So starting Wednesday, we have the 4 biggest banks reporting, and then next week and then the week after are going to be the guts of earnings. The market seems to think that earnings are going to be good, so there's optimism. But where there's optimism, there's also going to be over-optimism, and there could be some concern. So they're going to be watching very carefully what the banks have to say Wednesday morning, Thursday morning, and Friday morning. Let's look at the charts now, because the charts do tell us a story as well. The Dow Jones finished right up here at a new high on April the 9th, very strong. The NASDAQ has made a double top. And if we go back and we see that very clearly, we just take out all of the drawings here. We can do that with Motive Wave. And we take out the chart and we just go to a basic study. You can see the strength of the NASDAQ coming back and double topping. So that is going to be a concern for people. And if you look at where it double topped, it closed higher than its previous high close, which was back on February the 11th. But it made a run up on Monday, February the 16th, and then started its pull down. So breaking away from this double top is going to be tough. If we look at the S&P, S&P finished with a new high as well, and you have it breaking at the top of the Bollinger Bands. Now looking back, the 50 and the cloud were support on March the 25th, and we moved up from a value of 38.77 up to 41.28. The 50 and cloud were also support back here at the beginning of March, and the 50 was support on January the 29th. So we've cycled. If you look at cycles from this 50 to this 50, this 50 to this 50, we really didn't travel very far. If you draw a channel on there, it looks something like this and this. We've really been, let's get rid of there we go. So we've really been trading in this channel since our start of the 50 right back here. So let's put the line right back there on the 50. Came back, the 50 was midpoint in our channel. The 50 is still midpoint in our channel. Now we're above the channel. Get rid of the Bollinger Bands, see that a little bit more clearly. Breaking out of this channel, there's reason to be hesitant, to be cautious. Now Apple, very, very strong. Breaking out of rather heavy resistance in the cloud. The Chiku span still has resistance somewhere around 135. Its earnings are coming up in the third week of earnings, so not next week, not this week coming or the week after, but the week after that. So there's a good chance that Apple will hit 140 in anticipation of those earnings, and then the enthusiasm might be built in, and it would take really something exceptional to push Apple above $140. Remember, that was a 7-for-1 split, so that has Apple at over 900, and there was a split before that. So I mean, that's pretty high value. Let's not look at too many other stocks. Let's just look at NEO, not going anywhere. Square, particularly strong. Let's take a look at sectors. So let's go back and let's look at these sectors. Let's look at this map, and this was Friday. Let's take a look at it for the week. Let's look at the weekly performance. So we had a really good week. We had our technology sector, pretty much solid green. We had the financials, solid green. Healthcare, a little bit mixed, but more on the green side, but your big pharmaceutical companies were in the red. Communication services, Google, Facebook, green, but your telecom services, your high dividend earners didn't have a good week. Your consumer cyclical was all green. Consumer defense was green. Industrials were green. And restaurants, this is the area that we want to look at right here. Restaurants, travel, and the consumer cyclical, they're going to show us the strength of the reopening market with the COVID vaccinations going up. Now let's look at 1 month performances. And we still see it pretty strong. We still see technology, communications, consumer cyclical, all the things that we saw before were all strong. Healthcare has not been with us for the last month, and then the financial services were mixed as well. The industrials, let's look at the industrials now. The specialty industrials and the aerospace, farming, staff farming, these were all pretty strong green. If we look at a 6-month performance, I mean, that's still pretty strong. Still pretty strong. Same areas of strength, same areas of relative strength. And year-to-date performance looks a little bit different, not as much green, but you don't see the high variances between lots of reds and lots of bright greens. It's sort of muted colors all the way through, but we've had a really good year. Now, the market could be setting up for a blowout with these earnings, and then a lot of pulling back going into the month of May. So there is reason to be concerned, but not this week. This week you should still be bullish, and probably going into next week, depending on what the banks report. So stay long. If you have short calls, I would be doing 1 month short calls for small amounts of premium, because there's a chance that that these stocks are going to run up, and this is just not a good time to be getting your stocks called away from you.